Okay, here's another trade for GE Vernova, which is a relatively new company after GE split into three companies. This is one of them. I'm not even sure which one this is, but it doesn't matter. So for February 20th of 2025, this was the entry time. I'm going to go ahead and pull up the Russell 2000 so we can see what the market was doing, what that market was doing. So we basically had straight line information going down on the 233-minute chart. We have look at each of those. And if you look at the daily is also moving down. That's crossing. That was maybe not quite crossing, maybe not quite crossing. They were basically laminated ahead of time. And I guess this was maybe, yeah, so very close to straight line information going down on the market on the daily, as well as also being on the 233. So let's come back to GEV. And if you look at the weekly called color, I said white and red. That was my call. Then you work down for the 3-day. We have Christmas cross, so that's one. We have on the daily, that might be crossing. I'd have to turn off. Let's see what it looks like without the candles. Yeah, it looks like there was separation in this crossing. This one maybe not quite crossing, and not exactly, but it's very close on all of those. The 233, the decision chart, we had crossing, not crossing. So straight line information on the 233 and support on these two bigger charts. So I don't know how you necessarily count those values, but that is okay. The considerations list, I said this was down on the weekly, which is actually kind of I think it's okay here. There we go. That's what they had bumped forward for some reason on which candle it was. This is going down. The herd on the monthly, uh, it's off this window, but I said it's probably standing still. As far as the movement, we have down, down, a little bit of rope. Let's make sure we're on the right candle here. Okay. So there's a little bit of rope, and it's not the greatest condition of the rope. I said this was a short trade duration. The auto wave calculation, I got to, I guess I used, yeah, 13 points lower than the current price. So that's about 340. It's getting to be late February, the year that ends in 5. Earnings were on the end of July, or about a month ago, miss, and no real data on the options at this point. So I'll skip all the rest of the consideration list. So I opened this up and I said, if you look at trades, the mid 20s, I guess, would be kind of a shorter trade, a smaller move, let's say, move, not trade. So I went ahead and said week one, March week one, $345 puts, which is just a little bit out of the money. The price of the decision was 350, 374. Could have said 350 puts, but I guess I was thinking it would make it down to 340-ish. Maybe that was ambitious, maybe. But anyway, that's what I said. Based on some historical stuff from this, I said that from Thinkorswim, I said those are probably around $8, maybe probably a little bit under $8 per trade. So let's go ahead and march forward. Okay, so moving in my direction, staying. We'll do 2 more. So there's a lot of, there are many pieces of exit criteria. There's the bottom bullet. So on the 233, there's the bottom Bollinger Band, the auto wave line, rising. We're on the basically the rising 233 moving average line. The stock RSI is less than, both lines are under 20. We're cocked, but we do have continuation on the daily bottom Bollinger Band, auto wave line. Cox still also have continuation on the 3-day. We have the auto wave line, the bottom Bollinger Band, the bottom wick. So that is many pieces of exit criteria. We have continuation, could be a pause, but I said I didn't think the move was over yet. So I said I would stay. We'll go to the second candle on the 24th. So we're very similar. The auto wave line, 233, the bottom Bollinger Band, less than 20 here. Cocked over here, bottom Bollinger Band, auto wave line, less than 20 on both of them, cocked. We have continuation on both of these. Over here, we have the auto wave line, the bottom Bollinger Band, less than 20, and they're basically crossing. They've been laminated, but anyway. And I said this very well could continue down, but with 10 or more exit criteria, even with continuation, I'm exiting. The stock price was 315.80, but the option price, based on what I'm seeing on Thinkorswim, was $31.10. So from $8 to $31 in 2.5 days, 3 days, something like whatever that is. So for my evaluation, I think that I said shiny gold. I got in with correct reasoning. I'm happy with the option price and the expiration purchase. I perhaps could have purchased 1 week less, and that would have been $3 to $29. So that would have been quite something. I think 867% that's what that would have been. Instead of 289% in 3 days, it would have been 867%. So that is a substantial difference. The middle, I said shiny gold. I handled it. I assessed it at every candle. And the exit was shiny gold. I said I wasn't greedy. And I'll march forward in just a second. I think I've seen some trades where people have done something kind of like this, where they took advantage of. So it moved down on the second candle on the 24th, the Monday, and I think one could reason that perhaps it would open lower or move lower in the morning before moving up. And so let's look at this price. Closing price is 315.80. Go to the next candle. Actually went lower, but the low of that day, so it opened at 307 and moved down to 298. So, you could have sold between 307 and 298, somewhere in there. And instead of a $31 option, it could have been a lot higher than that. I'm happy with what I did, but if only this had been a real money trade, but this is a historical trade that I marched through just like this. So I think a more experienced trader would have done that. But that is what that is the trade on GEV, 289% return, a shorter 1 week less on the expiration would have basically tripled that result. And that's even without taking that to the morning and exiting maybe a few minutes after the open the next day. Since it was moving lower, that probably would have been reasonable. And I think that's something that GW teaches. So in any case, that's the trade. Good to learn from.